Welcome to the Jill on Money Show. It's Sunday, April 23rd. It is, I can't believe it. April is just clocking down and not my favorite month. So I'm happy to be with you, answering your financial questions, whatever they are. It could be a new job. It could be a question about your home. It could be a question about how to bridge the gap between a job you don't like and getting to actual retirement age when you can finance the next few decades. Whatever it is, we would love to be there with you. We, me and Mark, best producer in the world, and we're both certified financial planners. So go onto the website, jillonmoney.com, and click the Contact Us button and let us help you get where you want to go. Today, we are talking to Richard, who's on the line from California.
So I live in California, so a little bit higher on the taxes, and I make about $100,000 a year. It's a sales job, so the commissions can kind of go back and forth. But what I'm looking at right now is I have about $127,000 in my 401k. That's a traditional account. And I'm wondering if it makes sense to convert that this year. It'd be at the 24% tax bracket, but I figured I'd have 3 to 4 decades of tax-free growth. And just looking to see what I can do, like, small moves today that are going to have a huge impact down the line.
You are single also? Just wanted to make sure I understood that. Yes?
Single. I have no debt, no mortgage. I rent a room. I've got a small dog that just showed up in the room right now. So I apologize if you hear that.
Wait a second. What kind of dog? Because that's obviously the most important tell about who you are.
I have a little Shiba.
You got to send us a picture. Come on.
Yeah. Should I just send it to the email?
Yeah,
or
send it to me. Send it to the same email address. Say, here's my baby. So here's the thing. You have a 401k at work. And do you also have a Roth 401k option at work?
So they're opening up that option next year, and I've already signed up to contribute 50% of my paychecks until it maxes out.
Okay, great. You usually cannot do an in-service distribution from a 401k, usually. So I'm not 100% sure, but in most companies, they'll say, you got to leave what you have there. You can't roll it over while you are in service, while it's basically you're working there. But that said, unless you're planning on leaving the job, you can leave that alone and just concentrate on putting all new money into the Roth, which I think would be a great idea for you. As you said, it's great to be in this, 24% tax bracket or 22 or 24, depending on what's going on, and just do it going forward. I'm not sure it's 100% worth it to go through the rigmarole of converting what you have now. Are you doing everything at Vanguard?
So I do the majority of at Vanguard, but just to scratch the investing itch, I do have some stuff at Robinhood.
Yes, it tries to get young men like you addicted. I know.
Yeah, I mean, for everything. However, I'm not day trading. I usually buy stuff on a quarterly basis.
Okay. And what about the idea of purchasing a home in the future? Is that something that is sort of way back burner? Because you mentioned California, there's a high cost of living there, hot housing market. Is that anywhere in the future, just out of curiosity?
I'm not opposed to living in a rental unit, for the next decade. Stuff might change on my end, but at this point, I'd rather keep putting as much money into retirement, letting it ride, trying to get 7%, 8% returns on it, and then figure out what I want to do from there. At this point, I don't mind not owning a house. I don't have that want at this time.
That's great. So I think the game plan is don't worry about converting what you have unless you talk to your employer and they make it very easy to do in-service rollovers, which is a pretty simple question. You can just find out from the HR department, whoever handles the 401k. If you can do that, then great. I agree with the game plan. If you can't, don't sweat it. You've got the 401k, the traditional, let it sit there. You'll start the new Roth 401k next year. You've got your existing Roth IRA, and you got the investment account, which is growing. So I think you're in really good shape. So beyond the Robinhood, just out of curiosity, how do you approach investing in the other stuff?
Yeah. So with Vanguard, it's just, I let Vanguard self-manage it. And it's all index funds or target date funds. And, it's kind of set and forget. I don't plan on using the money for a couple decades. So I don't mind just buy and hold. So it's a boring strategy, but it's a simple one. I don't mind waiting a couple decades to see what it looks like.
I love what you're doing. I love that you're thinking about Roth. I think these are really positive ways to impact your future. And if anything else changes, or if you say, oh, I really do want a house or want some help with other things, feel free to give us a shout. But otherwise, I'm giving you, I'm going to say 4 gold stars, basically. I would give you 5, except for the Robin Hood thing. But I understand. It's sort of like saying, well, you know, you've got a little itch and you scratch it and it seems like under control. So 4 stars for you. Thank you so much for joining us, and do stay in touch. Send me a picture of that puppy, okay?
Yeah, will do.
All right, deal. Thanks so much for calling.
Thank you, Jill, and thank you, Mark.
Okay, if you, like Richard, need a little bit of guidance, give us a holler. Go to JillOnMoney.com, click the Contact Us button. Don't forget to check the box if you want to come on the air. And also, why don't you consider subscribing to our brand new service? It's called Jill on Money Live. You'll have access to quarterly live webinars and more special content. Don't forget to leave us a rating and review on Apple. For some reason, it really does help us, and put your hands metaphorically on someone's back. Change your work, change your wealth, change your life. Thank you for listening. We'll talk to you tomorrow.